Bismillahirrahmanirrahim. Assalamualaikum to all the boards of directors and my fellow financial analyst team. Today, we financial analyst team would like to discuss on two companies that board of directors are considering to invest, which is Milux Corporation Berhad and Khind Holding Berhad. Here a little briefing for both companies. Milux Corporation Berhad, a Malaysian company, has been a leading manufacturer of household appliances since 1977. Initially a trade business, it specialized in import and sold electrical and gas products. Since then, the company has expanded its offerings to include various products such as rice cookers, range hoods, water heaters, fans, and kitchen appliances. Milux prioritized research and development to ensure high-quality products and technological advancements. To maintain competitive pricing and productivity, the company invests in cutting-edge production facilities and procedures. Milux also exports its products to foreign markets, showcasing its reputation for producing reliable and long-lasting appliances. The company is listed on Bursa Malaysia Stock Exchange under the code 7062 and is subject to regulatory specifications and financial reporting rules. With a focus on quality, innovation, and customer satisfaction, Milux Corporation Berhad has a significant presence in the Malaysian home appliance market. Next, Khind Holding Berhad, a Malaysian business founded in 1961, specialized in producing and selling electrical home goods. Established in Sekinchan, Selangor, the company has grown into a reputable brand with a wide range of products and a significant presence in Malaysian and international markets. Khind is known for its quality and innovation, offering dependable and cost-effective products in various sectors. The company operates through a network of dealers, merchants, and distributors in Malaysia and other countries. Khind Holding also has divisions in industrial automation, building materials, and investment holdings, offering automation solutions in manufacturing and food processing sectors. The company has invested in real estate, telecommunications, and renewable energy with subsidiaries in China, Hong Kong, Thailand, and Indonesia. Khind Holding shares have been publicly traded since 1973 and is listed on the Bursa Malaysia Securities Berhad. The organization has grown and been successful over the years in large part due to its dedication to quality, innovation, and client happiness.
My name is FATIN HANISAH binti ABDUL SHUKOR, and I'm going to talk about liquidity ratios and efficiency ratios. For liquidity ratios, it includes two ratios, which is current ratio and acid test ratio. Next. So I'm going to talk about current ratio first. It shows that in 2021, the current ratio for Milux Corporation is higher than Khind Holdings, which is 2.08 times. And for Milux and 2.08 times for Milux and 1.86 times for Khind Holdings. So Milux Corporation estimated will have no problem of paying their obligations on time. And second, for acid test ratio, Milux also has higher ratio than Khind Holdings, which is 1.71 times for Milux and 1.09 times for Khind Holdings. But both companies got their ratio more than once, so there will be no problems on paying their current liabilities on time. Milux, next. So we can conclude that Milux got more strength than Khind Holdings. And for improvement for Khind Holdings, they need to stop holding too much inventory or reduce their current liabilities. Next, for efficiency ratio, or also known as asset management ratio. One of it include inventory turnover ratio. Khind Holdings has higher ratio than Milux Corporations, which is 3.28 times for Khind Holdings and 2.09 times for Milux Corporations. It shows that Milux Corporations is less efficient and have poor sales. Also, they got excess inventory, so that is the reason why they took longer times to convert their inventory into sales. Milux took longer times for average collection period, which is 95.9 days, while Khind Holdings only took 71.2 days. This is for average collection period. And for non-current asset turnover, Khind Holdings has higher ratio than Milux Corporations, which is 7.63 times for Khind Holdings and 6.53 times for Milux Corporations. And last one for efficiency is total asset turnover. Khind has 1.6 times ratio, while ratio for Milux Corporations only 1.01 times. It shows that Khind Holdings has higher ratio than Milux Corporations. Next. So we can conclude that for efficiency ratio, Khind Holdings have more strength compared to Milux, and for suggestion, Milux should increase their sales or dispose some of their assets. Otherwise, they can also giving trade discounts for purchase in large quantities.
Okay, my name is Umairah, a member of financial team from this company. Today I will explain about leverage ratio and profitability ratios. So first of all, I would like to discuss some of leverage ratios to make comparisons between Milux Corporation and Kin Holdings. The ratios are debt ratio, debt to equity ratio, and times interest earned. Next. Firstly, debt ratio. Based on the calculations of the debt ratio from both companies, King Holdings has a higher ratio, which is 0.5028, while Milux Corporation has 0.3192. It is approximately 50% of Kin Company's assets are financed by debt and the remainder are financed by shareholders' equity. The creditors or financial institution will often favor a firm with a smaller debt ratio since it reduces the possible losses that may arise in the case of liquidation. Thus, Kin Company would have trouble raising additional borrowings. Next is debt to equity ratio. As calculated above, debt to equity ratio for King Holdings is higher than Milux Corporation. The ratio for King Company is 101.12%, while Milux Corporation Berhad is only 46.89%. Hence, it is proven that King Holdings uses more borrowing as the source of financing because it has a higher ratio and the value is greater than 100%. Furthermore, it is calculated that the value for times interest earned for Kin Holdings is 10.38, while for Milux Corporation is 19.83. The value of time interest earned for Kin Company is lower and it may have a higher difficulty to fulfill interest obligations due to its ratios. The higher debt make the company have many commitments to pay its debt. Next. Lastly, for conclusion, Kin Holding has high percentage for all leverage ratios. Milux company has strength in the leverage ratios because the company used lower leverage to finance its asset. The firm used more equity and did not rely on debt in the financing strategies. Hence, Milux Corporation could reduce losses in the company because the company does not have many commitments in debt. The company would experience easiness in raising additional borrowings. On the other hand, the weakness of Kin Company are the firm use higher leverage and has higher financial risk. The company also had more borrowing as its debt position is high. It happened because the Kin Company may be borrowing more than necessary. So the company might rely more on external financing for expansions, operations, or management. However, the usage of debt might result in a multiplier effect on the company's profitability. As we know, the higher the risk, the higher the return. Hence, if Kin Holdings do not take leverage beyond an optimum level of leverage, the risky firm might generate more income from it. Okay, so next we will proceed to profitability ratios. Some of the profitability ratios are gross profit margin, operating profit margin, net profit margin, return on asset, and return on equity. So we will discuss one by one. Firstly is next, gross profit margin. So based on the calculations of the gross profit margin for both company, it is proven that GPM for Kin Holding is greater, which is 32.11% compared to Milux Corporation, which is only 29.93%. It means every RM1 ringgit of sales from Kin and Milux company, there are 32 cents and 29 cents gross profit has been made by those companies respectively. Kin Company is less profitable than Milux Company in terms of gross profit margin. So it may happen due to the high cost of goods sold and weak pricing strategies. Next, operating profit margin. It is calculated that Kin Holdings has 6.15% of OPM, while Milux Corporation has 9.62% of OPM. Even though Kin Company has a higher GPM than Milux Company, the company has a lower OPM. So this may occur because of the high operating expenses and the company has significant indirect costs for things like marketing or capital investment allocation. After that is net profit margin. King Holding Berhad has 4.31% of net profit margin, while Milux Corporation has 8.76% of net profit margin. So Milux Company has a higher net profit margin compared to King Company. It might happen because of the higher operating expenses and weak financing strategies from high leverage. So it will make the company have a high interest charge on debt financing and high tax. Other than that, next is return on asset. Based on the calculation, ROE for King Company has a lower ratio, which is 6.87%, while Milux Company has 8.85%. From there, the low ratio because the company have made excessive investment in assets that have not increased income and did not utilize its resources to their full potential to increase earnings. Furthermore, the last ratio is return on equity. So based on calculation, the return on equity for King Company is 13.82%, while Milux Company has 13%. Okay, so even though almost all of the profitability ratios for King Company are lower than Milux Company, the company has a higher return to its investor. However, a high ROE is sometimes denoting risk or growth firm. So high ROE might not be because of the profit, but it is because of the high debt financing in the company. So a company's equity may decline because of the high debt it has. On the other hand, ROE for Milux Corporation is lower, maybe because of the low of its non-current asset and total asset turnover. It happened because of the underutilization of non-current asset and too much investment in asset. Next. Okay, in a nutshell, we can conclude that almost all of the profitability ratios from Kin Holdings are lower than Milux Corporation, except for the return on equity ratio. Based on SWOT analysis, Milux Corporation has strength in the terms of profitability. It may happen because the company efficiently managed its investment of assets, had low operating expenses, had great strategies in financing, which led to profitability for the firm. So one of the opportunity is the company may plan for growth for the company or for the change in the firm. So shareholder also have a higher returns from their investment. On the other hand, Kin Holding has some weaknesses that may make the company less profitable when compared to Milux Company. But Kin Company was still profitable in that year. It may happen because the company has higher operating expenses that make the company less profitable than Milux. Not only that, Kin Holdings might have more borrowing and it makes the interest commitment that the firm needs to pay higher than Milux. Hence, the company needs to cut some of the unnecessary expenses, lower its cost of sales, and do not take any more debt in the future to stabilize and improve its profitability.
Okay, I'm Siti Narsha binti Nasrul Hakim. I'm going to explain about marketability ratios for Milux and Kin companies. Okay, there are 5 components for marketability ratios, which are earnings per share, dividend payout ratio, price earnings ratio, and dividend yield. Okay, firstly, earnings per share. From the figure above, Kin Holdings Berhad has 0.6235 ringgit earnings per share, which is higher than Milux Corporation Berhad, that is 0.0283 ringgit. Kin Holdings Berhad shareholders are getting 0.6235 ringgit for each share held in the company, while Milux Corporation Berhad shareholders are getting 0.0283 ringgit for each share held. Hence, we can identify that Kin shareholders are getting higher profit per share than Milux shareholders. Secondly, dividend per share. From the calculation above, dividend per share for Kin Berhad is 0.05 ringgit, while Milux has 0 ringgit dividend per share. With regard to Kin Berhad, the company is paying 0.05 ringgit dividend per share to its existing ordinary shareholders, while Milux Berhad is no dividend that has been paid or declared by the company since the end of the previous financial year. It is because the group had just returned to profitability in financial year of 2021 after 5 years of losses. Hence, a dividend payout policy has not been established. And then dividend payout ratio. From the figure above, Kin Holdings Berhad has 8.02% dividend payout ratio that is greater than Milux, which is 0%. Therefore, we know that Kin Berhad distributes 8.02% of its earnings as dividends and retains the remaining balance for investment, expansion, and other purposes, while Milux Berhad makes all of the profits spent on the investment, expansion, and pay off debts. Then we move to price earnings ratio. Price earnings ratio compares the current market price with earnings to establish whether a stock is overvalued or undervalued. It is shown that Khind Berhad has 6.07x6 times price earnings ratio, while Milux has 33.9223 times. This is because Khind Berhad has higher market price per share, which is 3.79, while Milux is 0.96. Since Milux has higher price earnings ratio, it expresses a high level of optimism about the future of the business, high growth potential, and lower risk compared to Khind Berhad, and may be possible to be overvalued. Lastly, dividend yield. From the calculation above, dividend yield for Khind Berhad is 1.32%, while Milux has 0%, which shows us that the return earned on shares for Khind Berhad is bigger than Milux. Milux Berhad has no dividend yield because the company does not pay any dividend to shareholders, and makes the company has no dividend per share. As a result, Milux Berhad has no return on shares. To conclude, all marketability ratios for Khind Holdings Berhad are higher than Milux Corporation Berhad except for price earnings ratio. This shows us that Khind Holdings Berhad has strength in investors' confidence and optimism towards the firm's growth potential and performance compared to Milux Corporation Berhad. It is because the company is able to manage its financial, earnings and dividends so that investors not to lose faith to invest in the company. Conversely, Milux Corporation Berhad has lower marketability ratios except for price earnings ratio due to its weaknesses such as financial trouble, dividend suspended, and profit or earnings are not wisely utilized. Hence, the company should exercise prudent money management by reducing debts and expenses, maintain a steadily rising dividend payment ratio to create a healthy and high level of maturity business, together with utilizing earnings wisely by making more money for each share of its stock.
Okay, after comparing both Khind Holding Berhad and Milux Corporation Berhad, we as a financial analyst would like to recommend the board of directors to consider investing in Khind Holding Berhad. Khind has a higher return on equity compared to Milux Corporation Berhad, and its market ratio shows more profit to shareholders. The company is also a well-known brand in Malaysia and globally, with efficient financial ratios. In addition, Milux Corporation Berhad has experienced a loss 5 years ago, and there is a high risk of not paying dividends in the next year. As an investor, it will be a significant loss without receiving the return on capital. Khind Holding Berhad's long-term success and ability to pay dividends make it a better investment choice. So that's the end of discussion from us financial analyst team. Thank you for your cooperation and Assalamualaikum.